Well, the results of SACCI's monthly trade conditions survey for March have just been released, with the activity index reflecting current trade conditions improved to 56. That following 54, which was recorded in February, and 44, which was recorded back in January. Now, joining us to provide some of the detail behind the headline figure is Richard Downing. He's an economist, of course, at SACCI. Thanks so much, Richard, for joining us this afternoon.
Good afternoon.
Well, we've got the trading activity index staying in positive territory, and we're now sitting, 16 points higher than we were a year ago. Overall, is this something that we need to start getting excited about, especially in a context where we've just seen retail sales figures reveal that consumers are still under pressure?
Well, I think this is not only retail sales we're looking at. Of course, we're looking at total trade conditions. It includes, there's also foreign trade in there and all that kind of stuff, wholesale trade. But I think it's positive. But to some extent, the World Cup, I think the euphoria behind that perhaps has moved this figure into more positive territory. And we see internationally, the economy of the world is picking up to some extent. So international trade is actually also helping a bit. But what is interesting this month is there's a switch. Your expectations is coming down. It has been high at about 68 last month. Now it's at 64. So the expectations that were there earlier in the year, it was now coming through in terms of the trade activity itself. But there's a slowdown in that, and so that is one thing. The positiveness about it is that your sales volumes are up. That we can see. New orders are still going. So there's a lot of all the sub indices of the trade conditions are actually in positive, moving positively. So there is something in there. There's something about the recovery. But giving all the sort of mayhem, as we can call it, we had in the economy, outside the economy as such, during this month, strikes and all this type of thing. I think this is a bit of a negative for the economy, and retail sales is perhaps, especially in terms of the middle income groups, being put under pressure in terms of inflation, I think much higher than for the overall inflationary picture that we get about South Africa.
Yeah.
And I'm a bit worried, the inflation expectations being down. Is that real, and does it measure the real inflation where it really matters? Because the inflation that matters is people who actually create jobs and that type of thing. And I think in that category, inflation is perhaps higher, especially with the upcoming electricity prices and a lot of fuel prices moving up. So that's negative.
Yeah.
But the other positive is, of course, employment. And but that might be temporary at the moment.
Oh, well, of course, while there are these overarching concerns, what offers to an extent some reassurance, one would assume, is the fact that we've seen all the subcomponents of trade actually contributing to the trade conditions this time around. So what we're seeing is more broad-based activity coming to the fore here. And with that, the assumption is that it's set to be more sustainable, less volatile than we've seen in the past. So is that something that is reassuring, especially given the fact that you've said there is also a tempering of expectations now?
Yeah, there is, but the expectations, we must remember, is now in the aftermath of the World Cup. So perhaps there's still some built-in sort of positiveness in the current situation. That's got something to do with that. But I think we might get to a base that's more sustainable, but there won't be fireworks, that's for sure. The economy, the recovery will be slow. The employment, real employment, permanent employment must first start to kick in before we can see the consumer really going into debt again. We can see, credit extension is still very wary, although it increased by about 3% in nominal terms last month in February, but it's still, if you take inflation out of that, it's still in the real decline in credit numbers of some 4%. So, you're right, the consumer is still under pressure. Employment is the mainstay, the key thing that must happen there. And I'm afraid, what we're seeing at the moment is not to say that employment is that permanent to really get us onto a much higher level.
Also to bear in mind that, of course, we are looking at the World Cup as a once-off event, and we need to see sustainability beyond that. And if we hone in on one of the numbers here, the inventory index, it rose to 49 in March, and I was reading suggestions that restocking is, of course, happening ahead of the World Cup here, but it's still sitting just a point higher from where we were about 6 months ago. So to what extent does that really hold true?
Yeah, well, that figure is it's not a very volatile figure. It doesn't move that much. But 49.50 is about a good figure to have there, where it actually indicated 50% of your respondents actually rebuilding on inventories. But what's worrying to me this morning, there was some news about 300,000 tickets given back before the World Cup. So I think perhaps one must just be careful. I think business is always very positive about any issue, and perhaps that's what we see in expectations, and it might still be corrected to some extent. But let's hope the World Cup brings in something positive, because it's actually on our balance of payments where we're going to score there. And with the rand being strong still, that might also be positive to some extent.
If we look in on selling prices here, it ticked up to 56 in March from 54 in February. So a slight improvement there, along with the movement that we've seen in the input price index. And a lot of that, as you were outlining, as a result of inflationary pressures. Now, considering that we've still got higher water and electricity tariffs to factor in down the line, I mean, what's your outlook in that regard and the implications thereof on selling prices?
Well, that's my worry. I think the expectations we see is to see inflation down at 5.5, not that far down the road. And I don't know, given this process of inflation and of electricity and fuel being sort of basic commodities in any manufacturing or trade process or whatever, this will still be negative on the inflationary process. So that I still see with some difficulty, and we must remember the rand can be volatile. The rand very positive at the moment. World Cup coming up, there's an inflow of money. There's lots of liquidity in the world. That might change. Some people even say that China might, in 6 months, be something else than what it's now at the moment, and with the fact that their currency might sort of change still, to the dollar. So there's a lot of variability in the whole scenario that we're seeing at the moment. So it's a bit dangerous to go out there and say, okay, everything is nice again.